Thank you very much. Pelin Ataman Erdönmez from the Banks Association of Turkey. I am the director responsible for sustainability, financial restructuring, housing sector, real estate valuation, and publishing. Having the great pleasure of being with you here today, I would like to thank the organizer of this international conference for gathering such a select group to discuss the current global trends as well as giving me the possibility to address them. Today, I will present a concise overview specifically on sustainable finance implementations globally and in Turkish banking sector and beyond. First, I would like to start with some food for thought about our collective vision regarding the latest global trends. We all know pros and cons of climate change and subsequent need to finance climate change adaptation and mitigation actions. This is especially a significant burden for private sector and public sector alike, albeit from very different stances towards the issue. We can also add to this the regional and local governments. There are several issues to consider: regulatory, actual funding processes, reporting standards, etc., that also reflect on banking sector. Environmental, social governance, ESG investments have turned into the mainstream all over the world, as we know. In this process, the development of the strong green finance and low carbon economy model with the set ECG investments are determined as priority targets. The market size reached near 4.5 trillion US dollar in third quarter of 2022 and is up from 3% trillion a year ago. Expected market size is 30.9 trillion US dollar by 2032. ESG debt issuance in emerging markets remains strong. Banks and related institutions are incorporated ESG factors into their overall operations and governance. In 2021, rulemaking and reporting standardization has also been a key focus. The process is fast-moving as regulators increasingly make ESG issues a part of their agenda. Global sustainable finance products issuance totaled 717 billion US dollar in the first half of 2023. Although this volume registered by a 7% year-on-year decrease, it's higher than the second half of 2022, and the whole year's volume for 2023 still has the potential to exceed 2022's volume. In 2023, the following global trends are gaining prominence in terms of sustainable finance, which includes climate finance as well. The first one relates to greenwashing. The discussion regarding the definition of greenwashing debound. A second, in transforming the global economy to a low-carbon environment, different stakeholders will have to make a different speeds and through different investment cycles. In banking sector, discussions are thus abound for what is known as transition finance, as is the case for greenwashing. Third global trend is the development of sustainable finance products by the banking sector, such as green bonds and green deposits. Another important trend is carbon border adjustment mechanism, CBAM regulation. EU published the CBAM regulation in the official journal on 16 May 2023. The CBAM itself will be implemented in its transitional phase as of 1st October 2023, with the first reporting period for importers ending 31st January 2024. It will initially apply to carbon-intensive sectors: cement, iron, steel, aluminium, fertilizers, electricity, and hydrogens. As contribution from a European country, I now will concisely mention recent highlights from banking sector in Turkey on sustainability, some of them reflecting the global trends I just mentioned. Sustainable finance activities accelerated as a reflection of the climate change that settled on the global financial agenda. Sustainability-themed bond issuances, bond loans increased rapidly under the leadership of developed countries in the post-pandemic world and recorded significant growth. Considering the significance of sustainability extending to all aspects of our lives, next to sectoral and professional issues, our association continues to closely monitor and share the developments in this area with its members, work towards enabling it to become part of corporate culture, and to comply with international good practices through following global trends, both in terms of development of financial products and compliance with international reporting standards. With this in mind, when we look at the current best practices and subsequent developments in the agenda of our association, there are not one but many. Therefore, I will only mention potentially interesting ones for the convenience of other members here, given the time constraint we have. As is known, Turkey is highly vulnerable to impacts of climate change. In recent decades, flooding, heat waves, wildfires, and extreme wind force have affected our country with increasing frequency and intensity. In October 2021, Turkey signed the Paris Agreement on Climate and pledged to achieve net zero carbon emissions by 2053. To support our country's climate action, a memorandum of understanding was signed between our country, the World Bank, France, Germany, United Nations, IFC, and EBRD. Banks have, as we all know, banks have direct and indirect environmental and social impacts through their activities as well as the loans they grant, and therefore activities of our members are summarized. Best practices by the members sustainability are available on our website. You can find more details on our website. Our members consider sustainability as an integrated business model. An environmental social risk assessment system has been established by our banks to conduct project and customer-specific risk assessments. Banks carry out their environmental and social risk assessment and monitoring processes in accordance with national and international legislation and global standards. By preparing environmental and social action plans, our banks act as intermediary in the development of their customers' environmental and their social capacities. Specific credit rules for companies' finance and credit products aimed at reducing foreign dependency on energy resources, which is a heavy burden on the national economy, and minimizing environmental damage were implemented. As the association, we established a working group for sustainability in 2009, made up of several banks representatives. Through the work of the working group, we have prepared and published sustainability guidelines for the banking sector in 2014. During the preparation of guidelines, consultative meetings were held with international organizations such as World Bank, IFC, and UNEP. Through the time, the revisions made in the principles on which the guidelines are based and the changes in the legislation of our country, the need to update the aforementioned guidelines has arisen. For this purpose, the sustainability guidelines was updated and presented to public in March 2021. The basic principles and regulations on which these guidelines is based are as follows. The Environmental Social Risk Management Manual, prepared by EBRD, Equator Principles for Subsectoral Environmental and Social Guidelines by EBRD, Sustainable Development Goals of United Nations, Turkish legislation, Environmental Impact Assessment Regulation, etc. Our working group prepared guidelines on establishment of green association for the Turkish banking sector with our members and participation banks. And our Banking Regulation and Supervision Authority drafted a regulation based on this guideline. We started to prepare a guideline regarding the forming the heat map methodology for the Turkish banking sector. As the association, we started ISO 14001 certification and carbon footprint calculation process. Recently, we published the carbon footprint calculation process report on our website. We started the studies on the creation of institutional regulation on the establishment of environmental management system within the association, a gap analysis report, a publication on banking sector sustainability outlook report, and our association sustainability report and sustainability policy have been prepared and published. Reports have been published on the website of our association under the title of Green Transformation and Energy and Agriculture Sector. We are planning conferences and webinars on sustainable finance and climate change for autumn 2023 and 2024. We also prepared a training catalog on climate finance and sustainable financing instruments to raise awareness of professionals on sustainability in the banking sector. Our board of directors has made an advisory decision on green finance to share its members and encourage them to develop inclusive and financial tools to help their clients increase their awareness in the areas and using the methodologies of their choice. We are making periodic meetings with our banking supervision and regulation authority officials and our members on best practices on sustainability. BRS sector-specific sustainable banking strategy plan 2000 for 2022-25 sustainable finance highlights the recent holistic approach of the sector. BRSA also published the possible effects of the European Union's carbon border mechanism on the Turkish banking sector credit portfolio. Clearly, sustainable banking, investment, and finance are topics with a wide scope, and there are several steps to be taken at present and future. As the Banks Association of Turkey, we accelerate our efforts to provide optimal solutions to the challenges ahead every single day. I thank you for your kind attention and wish all the participants a fruitful conference. Thank you.